Eugene, let's talk about stock splits, because it's been kind of phenomenal seeing what's happened with Apple shares, with Tesla shares, just on the news that they were doing these stock splits. In theory, you're not getting anything more. You're just changing the amounts. But we have seen huge run-ups. So what do you think about stock splits? And are investors getting a bargain when there is a stock split?
Well, Becky, as common knowledge, really, stock splits really are a mathematical exercise. And so theoretically, there's no difference between owning 1,000 shares or owning 10,000 shares based on a 10-for-1 type stock split. However, investors have taken a different approach to that. And generally, stocks have performed a little bit better, even going all the way back almost 25 years when Berkshire Hathaway, which never split. As you know, Warren Buffett has been not a proponent of stock splits, created Berkshire B shares to basically thwart the institutional broker-dealers from creating unit trusts, because retail investors wanted to participate in a stock that was over $200,000 a share. So it's a little bit surprising to see what happened with Apple and Tesla with respect to how much they went up as a result of the stock split. But it actually caused me to take a step back and look at some other companies that might actually benefit from the same type of philosophy, where retail investors who know the companies, know the products, but the stock prices might be too high to actually get a round lot, which isn't as important as it was many years ago, but still investors like to have more shares than not. So I think that in this market where a lot of companies have done very well, stock prices exceeding $500 a share, it might be an opportunity for corporate boards to look at potentially expanding their shareholder base, creating more demand for their shares by something as simple as a stock split.
Is that because there are so many more individual investors in the market these days? I was looking at some numbers yesterday that just showed the amount of trading that's taking place is a much heavier percentage of individuals than it has been in the past versus just the bigger brokerages buying.
Yeah, I think it is. It also has a little to do with what's going on in option markets. It's also more retail investors are in option markets than have historically been. So essentially, we're playing a little bit of catch up with respect to the number of people that are actually demanding shares within the market. So there's a little bit of a mathematical reason for it to occur. But overall, essentially, you end up with the same dollar amount of holdings in a particular company post stock split, assuming it doesn't run up as much as Tesla and Microsoft as you had before the stock split occurred.
Let's talk about the names of companies that you think might benefit from it. Amazon's at the top of your list.
Yeah, it is. And it's sort of, if you think about it, Amazon basically is doing extraordinarily well. In the pandemic, almost everyone's using the company, and yet the stock price is very high. It's split a couple of times in its history, but it's been a long time since it's split. So if you're looking at a company over $500 a share, they could easily engage in a 7-to-1 or 10-to-1 stock split and probably have a lot more interest in retail investors. If you think about it, Amazon is not as expensive as Tesla, a little bit more expensive than Apple. They kind of sit right in between. And I think that it probably would be a good candidate for a split coming in the next, say, 6 to 12 months.